pal.
Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Pat FinTech, the training partner that demystifies fintech and digital finance for financial services professionals. Eoin Fitzgerald and I are back this week with another Money Talk segment, starting with some insights on Visa's deal for Tink and how the European context of Tink differs quite a bit from the US context of Visa's dead deal with Plaid. Then we look at Binance's recent troubles before rounding out with Revolut's recent reporting of their 2020 results, where they go from here. And oh yeah, there's also a random rant from me on autotune and hip hop, just because. All right here on Money Never Sleeps. Hey, how you doing, pal?
Not too bad, and you?
Good. Had my second Jabberati today. Got that done at about 4 o'clock this afternoon.
How you feeling?
So it went downhill pretty quickly. But no, I'm holding steady.
Yeah. Okay.
I think we'll be all right. And I actually was so worried going in because they don't send you a notification that you're supposed to bring an ID. They might have told me the first time. They didn't tell you the second time.
Yeah.
And then they ask you when you start walking in, hey, do you have an ID into the COVID vaccination center? And I didn't, but I just said yes. So they'd let me keep going. And then when you get up to the door where they actually check you again before you go register inside, it says you need to have an ID. So I had already scrambled and went and found an email that I had sent to somebody where I had given them my passport, my driver's license images in an email, my sent items. And I walked up just like I'm meant to be there, like I always used to do back in hotels in the US. It's another story for another day. And then the guy said, ID, please. And I just showed him my passport on my phone screen. Didn't bat an eyelid.
Fair enough.
That's me. I'm good.
You're good. You're done.
I was talking to my sisters today in the US. They reminded me it's another 2 weeks before it's fully effective, and then I can go to the US. So we'll see. We'll see what happens.
Oh, yeah? Oh, fair enough. Are you planning on heading over?
I don't know. We'll see. We'll see.
Let's see.
We'll see. So, a few things happening in our favorite fintech land in the last week. So, first one, our friends at Visa, the big mammoth Visa that they are buying the Swedish fintech firm Tink for 1.8 billion euro. And this came out as Sifted on the 24th of June, but that was realistically all over the place over the last week. If you remember correctly, and I'm sure you do, Visa were the ones that wanted to buy Plaid. Plaid and Tink are kind of close enough cousins to each other.
Yep.
And I said this to Cristiano Oliveira at Olivia. I said, Chris, you see this? Keep your eye on it. Visa's buying Tink. He's like, hey, Visa wanted Plaid. They couldn't get Plaid, so they got Tink.
That's how it seems. I mean, obviously they've loads of money to spend. It feels like it's filling that gap for where Plaid didn't go through. But then there's a couple of kind of key differences. I suppose one of the big ones being that it isn't the same as in the US. Like Plaid was like the only show in town. Whereas you've got, I don't know, maybe 30 companies in the open banking account aggregation space. So they're taking one off the table, one of the bigger ones. But at the same time, still leaves plenty of other options there. I think one of the interesting things was Tink had some really good clients with Nordea and BNP Paribas and a few others. So, but I think the biggest thing out of it is kind of Visa trying to move into the B2B space. It's almost trying to move out of the card space or trying to add more value or bring some more product features into their wider product set, acknowledging that cards aren't all the be-all and end-all anymore.
One of the things I saw, and this was from the FinTech Blueprint, Lex Sokolin, he did a bit of a closer look at the deal. And one of the things he said is that the differences between, as you mentioned, Plaid as a provider in the US and Tink as a provider in Europe is that, and to quote him, Plaid is primarily a data company because American banks do not like to expose their APIs or share client data, and therefore prying information out of them, which is what Plaid do, is done through screen scraping, bilateral deals, and other voodoo. So it's not easy to get this data out. Now, that being said, when we've talked about this before, especially when we looked at the Visa and Plaid potential deal, and then when it fell through, was that I've been getting screen scrape data going back to 1999 in my Fidelity account, right, on my US app. And so that's been going on for a very long time. It's just been in the last few years with open banking and PSD2 in Europe, where fintech providers were forced to move from screen scraping your bank data, because that was no longer an option, to leveraging bank APIs. In the US, the bank APIs aren't just given up for nothing, right?
Yeah.
They've got to do these separate deals to do it. So it's a little bit of a different context in that European landscape already has that regulation in place to enable someone like Tink to move a lot more freely than Plaid would try to move through
Yep.
Europe. So can you nail the big American market just with Plaid? Absolutely, you can if that was Visa. Can you nail Europe with Tink? Of course you can. Visa is a global company. They're going to want to cover as much as they can. So I don't think they're done with just Tink, but at the same time, I'm not sure if the same regulatory barriers that went up for Visa to buy Plaid, let's see if what might come out of the European regulatory side.
And that could be that's the big unknown, because actually when you think about it, you have 27 countries, they have fairly common standards around interoperability, but they're not overly keen on large US firms acquiring infrastructure. So obviously there was a reason why the US said no to the Visa Plaid deal, but I think it's going to be harder to mop up the equivalent companies over here. Obviously they're acquiring Tink, but a lot of the open banking solutions or offerings in the market at the moment are a bit more regional, despite them being European focused. They're still heavily focused in one or two markets. There isn't one company that you can acquire that's going to give you that reach into all of them. I think even if Visa get this one through, maybe the next one will be harder, because the EU are very strong on antitrust and monopolies and things like that. So I think it'll be challenging the more companies they try to acquire.
Yeah, let's just try to think this one through, right? So with Visa right now, Visa has their network rails, right? And they send payments over these rails, and banks connect to that. Card issuers connect to that. Payment processors connect to that. Could what Tink are doing potentially replace that? Tink connect banks to third-party fintech apps to provide information and data out of the banks and into the fintech third-party apps so that those third-party apps can operate and provide you with a view into your financial life, right, through the data that it's collecting from multiple banks. They also plug in to big banks, like you mentioned, BNP Paribas, CGD, which is a Portuguese bank. Their personal financial management toolkit, I love the name of it. It's called The Box, kind of like that old Saturday Night Live skit, The Bears.
No.
You remember that?
No.
Refrigerator
I've heard of
pairing?
them. Yeah, of course.
Yeah. I'm bringing it right back here, buddy. So Tink has a lot of those customers as well. Now, when you start thinking about what these third-party apps can do, not only are they receiving bank data, okay, and they're also, some of them that have been authorized as payment institutions also in Europe, because you can be an account information service provider or a payment initiation service provider. You can do the two together. You can basically move money around peer-to-peer, consumer to bank, bank to consumer, whomever, without using any of these Visa rails whatsoever. Okay, so that's why Visa wants in, because this is a new way for money to move around the world, starting with Europe and open banking and APIs and PSD2 that they don't have in the US. Regulation has enabled it to take hold in Europe. Who knows what the heck's going to happen in Asia? I don't know what's going to happen in the US. But I think Europe is a pretty good test case of a very complex framework of flows. Like you mentioned, a lot of this is regional. Tink came out of the Nordics, but they expanded across Europe. But in the UK, you've got the faster payment scheme, right? Obviously, UK is not part of Europe anymore, but that is a local complexity. In Ireland, well, there's nothing. So there's not much to try to do here. And then you've got different mechanisms in a few of the different countries around Europe as well. That's a lot to deal with. Tink have demonstrated clearly, if Visa are paying 1.8 billion euro for them, that they can handle all of this and do it well. The number of customers that Tink has speaks volumes of that. I think it's a good deal. Is it perhaps Visa killing the competition? I don't ever see in our lifetime Visa's rails going rusty because an API-driven payment provider, now this will come back to haunt me, an API payment utility ends up making these Visa rails unnecessary or redundant for that matter.
Yeah, look, I mean, Visa are experienced, obviously incredibly experienced at getting merchants and stuff to adopt new payments rails. They've a massive distribution network. There's going to be a lot of value add through this acquisition. But again, coming back to my earlier point, the regional issue in Europe means, to your point, there's not going to be a replacement for Visa and think that's still going to be a challenge. I think there could be some really interesting pieces coming out of it. I saw a tweet, I can't remember who it was the other day, tweeting about the fact that being able to KYC against your bank account, almost like an instant KYC piece with some of these third-party players actually using your bank account or using your bank as your verification, could make it very interesting.
Yeah, that a known trusted bank is already verified.
By Visa acquiring Tink, who already has the relationships then on the account side with and the BNPs and stuff, and being able to reverse, I suppose, verify you in that way, there could be some really interesting offerings coming out of it. And then I think it was Simon Taylor from 11FS, he was talking about being able to use like something like this, being able to be heavily used in the buy now, pay later space, which you talked about the last time we were chatting, about actually being able to do your credit underwriting from your bank account. So there's things like that. That'll be a really big deal. And again, it's using even the bank verification piece to allow you to kind of offer better services or offer different solutions. There's a lot more to come with it. I suppose the question is, big company acquiring relatively small company or still growing innovative company. Kind of, does that kill the innovation? We see that. Interesting to see what happens here.
It will. I mean, Visa are doing some interesting pockets of work. I think Visa Direct is one of their new units, right, that is doing some interesting things. But obviously, you've got the gorilla and bunny syndrome here, right? So they say they're keeping the brand, they're keeping the management team in place. But I wonder how long the earnout is going to be on this one for these guys to stick around.
They have also invested in TrueLayer, which is, I suppose, a competitor too. So they're in one of the later rounds for TrueLayer, and they've obviously invested before in Tink a few times. So they're obviously hedging their bets anyway by investing in the competing businesses, which is strange in its own sense, but obviously keeping an eye on what's going on in the market. So
yeah, I mean, and as a big investor, you're going to get pretty good information on what they're doing.
They're keeping an eye on all the players in the market.
I don't know.
We mentioned there's probably 20 to 30 of them, each with a specific kind of geographic or regional coverage. So they're obviously trying to cover everything. Cool.
Absolutely. Yeah. So Binance.
You probably have the facts better than I do.
Just to run down some of the stories here. I'll try to do this in chronological order. But the 9th of June, CoinDesk reported that Binance's chief finance exec has abruptly left the company. Okay. On the 10th of June, Yahoo Finance reported that Silvergate Bank, who are one of the big crypto banks in the US, or not crypto banks, they provide banking services for crypto exchanges, fiat. So Silvergate Bank to discontinue Binance USD deposits and withdrawals. Okay, that's another thing. Then on the 27th of June, Binance pulls out of Ontario in Canada, for those who didn't know where that was, following actions against other crypto exchanges. So Binance got a bit nervous about what was going on in Ontario, so they said, listen, we're going to pull the plug, because some competitors, I think, ran into some trouble there. And then on the 28th of June, BBC reported that Binance watchdog clamps down on cryptocurrency exchange. So the story that was running around, and there's another one that followed the next day, the story that was running around on the 28th was that Binance.com operates globally. They're a Cayman Island-based company. And Binance Markets Limited, I think, is the UK entity. And what the FCA actually clamped down on as an entity was Binance Markets Limited. So Binance's response was, listen, that's a separate company. We're not even really doing anything with it. And I think what it was is that Binance needed to submit for a UK entity for this crypto asset service provider regime in the UK, which I'll get back into in a second. And I don't know what happened there, but I don't think they're on the list. And the way that that's panned out is that a bunch of companies in the UK that are crypto asset service providers, or virtual asset service providers as it's being referred to here in Ireland, you have to register. And you register with the FCA in the UK and say, here are all my AML policies. And that is the main first step with regulating crypto, is saying, confirm to me and register with your local regulator that you have sound AML policies in place. So that's things like making sure that you're doing transaction monitoring, looking for any slightly nefarious potential activity. That's looking at doing enhanced due diligence when you identify perhaps a sore spot, when you do the KYC for a new customer, and you need to go deeper and figure out what that's all about. You're doing PEP monitoring, or politically exposed persons, to figure out if that perhaps brings any risk to the cash flows going in and out of somebody's account. And then you've got to do a risk assessment around the whole thing. So you got to know the business inside and out. You need to then be able to take an objective view and stand back and say, considering all the risks that are present for this business, here's how we feel about it, right? So that's a lot of work, and that's hard to do. And a lot of companies are going through this right now, in Ireland specifically, because they have a deadline of the 23rd of July to submit that. The UK's deadline already passed. A bunch of companies submitted it. 5 or 6, I think, were approved and said you are now fully registered. Another 85 or so were given temporary registration status. But whatever it was, Binance said, listen, we're going to pull our application. And then they basically came out and said Binance.com could still operate. Binance said this themselves, and Binance Markets Limited is an entity that we're no longer concerned with. So effectively, waving goodbye to the UK market. What's now happened is that on the 29th, yesterday, FT reported via Twitter, and I picked it up there, that Binance customers were locked out of sterling withdrawals and deposits in the UK. It's one difficult thing after another.
There's an element of probably the statement and the press coverage of it being a bit more being made out of it than probably is accurate, in the sense that UK investors are not locked out of Binance because they're investing, or they're working with the the Cayman Islands entity, and there's an entity there which is not regulated, and the FCA are saying it can't conduct regulated activity, but it's not regulated, and the activity wasn't being conducted, is what it seems like. So it seems like there's an element of like, oh, we're putting out this statement to make sure, but actually it sounds a bit worse than it is to a degree.
Yeah, it does, because what it comes down to is that if you open an account on Binance through Binance.com, you'll see in the terms and conditions the entity that you have a relationship with. And if it's Binance in the Cayman Islands, but you live in the UK, I don't know where that line gets drawn. But I've had a number of folks saying to me just in chats, hey, want to register my virtual asset service provider in Ireland? And I said, well, probably only really think about that if you actually have customers in Ireland. If you don't have customers in Ireland, then there's some different thoughts here. If you do, wonderful. But what Binance, I think, are effectively saying is that the customer relationships that we have are between Binance Cayman and UK residents.
Obviously, the FCA doesn't regulate cryptocurrencies, but it requires exchanges to be registered. Binance are not registered and not allowed to operate an exchange in the UK, but they don't operate an exchange in the UK anyway. So there's an element of, it makes a lot of noise, but really all I've done here is stated that Binance UK entity can't operate without a license, but it never was in the first instance. But there's probably an element of, with some of these, whereby they're registering entities in different jurisdiction whilst trying to obviously figure out their business model and where they need to be licensed, and it probably appears on the regulator's radar because of that. Given the focus on the space, and we've seen it before with different lending companies and stuff in the past, like surely, err on the side of caution. Why don't we just pay the extra money to be extra careful so that this doesn't happen? Like, what's the risk there? You have to open the paper and look at the regulation and the focus on crypto and the concerns that regulators have, and probably be better just engaging with them in some markets if that's the case. No harm. You listed 5 bad press articles in the space of a month, which probably could have been avoided to some degree. So
Yep. Anyway. This episode of Money Never Sleeps is sponsored by Pat FinTech, demystifying fintech and digital finance for financial services professionals. Pat FinTech enable financial services professionals to transform their capabilities into the digital age with dedicated virtual training programs geared towards those that can develop, deliver, and monitor optimally customized user experiences balanced by appropriate governance, control, and oversight. To learn more about Pat FinTech, go to moneyneversleeps.ie/PAT FinTech. Moving right along, your favorite, Revolut. I got my daughter a Revolut card, believe it or not.
Yeah, I got two of my kids have one.
I know you had them, and I was holding off because I was just so against it. Not against giving my kid a card, but giving my kid a Revolut card.
I know, yeah. You're not the biggest fan.
No. But I don't know. It's been 2 years since I had that major problem, and you have to admire what they're doing out there, right? But at the same time, you're admiring this wonderful product innovation and new things happening and financial freedom and all this great stuff. But it's costing them £425 million to make £222 million. So that is their 2020 results in a nutshell, right? Now, this is the Pre-public model, absolutely. That you spend a heck of a lot more money than you make in revenue in order to get your company to scale, to grow, so that revenue number can eclipse your cost number. And you can paint the financials any which way you want, but when you add it all up, spending 425 million pounds to make 200 million pounds is just
and I suppose, look, we've talked about it before, and this idea of just spending your way to profitability. Clearly, their investors continue to back it, and it's probably like the Amazon, the famous Amazon approach. It doesn't matter if we never get to profitability, we'll just keep growing and scaling. There was always going to be one kind of front runner, and it seems to be Revolut here. They're talking about 15 million customers. I think they had nearly just over 4.5 billion sterling on deposits from those customers.
Yep.
There's a lot of positives to it, given where they're at. They just seem to be trying to land grab everything to keep their position as the front runner. They're offering or trying to scale every type of product that they can offer in every type of market. And that's going to need a lot of funding.
It will need a huge amount of funding. So just looking at some of their last rounds, they did 80 million Series D top up in July of last year, 500 million in Series D in February of last year. So 580 million last year. So yeah, they're spending massive chunks of this money that they're taking in, but they should have some good runway left at this stage still. But there will be a Series E, and they'll go beyond that, clearly.
What I found really interesting from it was that 88% of their revenue comes from UK customers. So despite everything they're doing and being everywhere and going into every market, they're still heavily focused and reliant on the UK, which I was surprised at, actually. Yeah, I thought they'd have. Now it says more than 88% of revenue comes from UK customers. Not that UK customers make up 88% of the 15 million, if you know what I mean. But still, they're heavily reliant on the UK customer, because actually only 1.3% comes from non-European customers.
Yeah.
And we talked about them, their issues they're going to have in the US. I think the US is going to be incredibly difficult for them to crack. I think they'd be far better acquiring someone with an existing business there than trying to scale themselves. That's going to cost a considerable amount of money. Maybe going across into Asia and Asia Pacific might be a better option for them.
Not with WeChat and these super apps.
And that's what I mean. It depends if they avoid.
They do everything that Revolut do times 10.
Yeah. Like, they have a really nice product. It's really slick. It's probably one of the better ones from a kind of UX point of view. But again, hugely focused on one customer base for all the revenue. So it's going to be difficult to scale the revenue side of it.
Yeah, and we looked at these numbers in depth back on episode 100 and went through Monzo, Revolut, Starling, and where it all ended up. And Lex Sokolin, again, in the FinTech Blueprint, who produced those numbers last time on episode 100 that we talked through, he kind of gave another view of it this week in his newsletter. And the deposits per user on Starling just dwarf Revolut, right? So they're up at about 2,700 pounds in terms of deposits per user at Starling, and Revolut is at 317 pounds.
Yeah.
Okay. If you look at the valuation per user in terms of the number of customers, your number of users that you have of Starling versus their last market valuation, and you look at the same for Revolut, then you've got they're pretty equal, right? So it's just saying Revolut's valuation is just sky high, even though what it doesn't talk about is the profitability. Starling, I think, said that they're going to be profitable this year. They did say they were profitable this year and probably already profitable. So that they're out of Death Valley. So, and Starling, we know 100% of their revenues are coming from the UK. So if you're to match the two up for all of the wonderful toys that Revolut has, Starling is still the winner.
Yeah, and I think, because we talked about it in a different way when we were talking about Square the last time and like Cash App and stuff. I think, actually, it was when we were talking about Square and Tidal and kind of offering for creators and stuff. I think the opportunity here for Revolut is to take the value that they bring and the relationship they've built with their retail, public customers and bring that into the business side of it, transaction banking, FX, all those, because people who like Revolut like the functionality of it. I obviously haven't used Starling, so I can't speak to that, but if I knew Revolut rolled out a business offering and a business card and everything that worked well and gave a better experience than you had a few years ago, then I'd more than likely go with that from a kind of European point of view than something else.
I kind of feel like using it. It still sticks with me, is that the analogy for me is that using Revolut for your business account is kind of just using an @gmail.com address for your
Yeah.
business. You don't do that. You know.
No, but that's for their current offering. But at a certain point, you'd wonder, are one of these guys going to really make a dent on the SME side by becoming another player in the SME space?
I think they need full banking licenses before that happens, because when you are bringing hundreds of thousands, if not millions, maybe tens of thousands, if you're a small, a lifestyle business through a bank account, you want that to be a bank account. Now, I'm not speaking for Gen Z and even millennials when I say that, but I think that is still sound business and that is still pervasive. Most of the folks that I know that are using Revolut for a business account are because they're operating in countries where the traditional banks are still too naive to realize a high growth tech company, right? So they have no choice but to use someone like Revolut, which kind of is an e-money institution. It's not a bank yet, even though they're a bank in Lithuania. And in Ireland, all of our IBAN activity gets directed through Lithuania, and that is a European bank. That where their biggest deposits are in the UK, and that is an e-money institution, which is different.
I saw someone. I saw it on Twitter during the week about they've hired a huge amount of kind of former bankers. Part of that is the issues they've had with regulators. They're trying to obviously round out their senior team with actual bankers and stuff like that. But to your point there, they'll probably go down the route of, and it would be cheaper in the long run, probably to go down the route of kind of having a correspondent banking network, where they're leveraging the license of banks, to avoid the need to have that full banking license, but to be able to offer the solution.
To the FCA, and Nikolai, I heard him on 20 Minute VC, Nick Storonsky. I think he said Ireland, they've applied as well. So,
interesting.
They're just in limbo there a bit, I guess. But, we know how hard it is to get a banking license anywhere in any country.
Yeah. But look, we've talked about it before in relation to Monzo and Sterling and Revolut. The path to profitability here has to go through the SMEs.
You're right.
Ultimately,
it's the only way to do it, and that's why the deposits per user for Starling are so high.
Because actually, with Simon Taylor of 11FS, he had suggested that maybe their move needs to be like a UK equivalent of Brex, which is the kind of credit card company for startups in the US, and they're now moving into more towards a bank, or trying to get a license as a bank to be able to offer more kind of financial services products, is what Brex have been doing. So, Revolut going down that route as well, and being that kind of card provider or FX provider for startups and things could be an interesting angle.
That's a good point, because Brex have been adding products along the way, right? Starting out as a credit card, then get into deeper level of services with a current account, and that's adding products. What Revolut has done is add features.
Yeah.
You can do account aggregation. You can do crypto. You can buy into stocks, right? Yep. But still, I don't feel like those are new products. Those are just new features.
Well, exactly. It looks slick and it's really easy to use, but it's not, to your point, it's not really a new product. Like, I don't want to eat the week on...
But is that the point? Maybe the user doesn't want to think of it as a new product. Where when you are, that's it. I mean, when you're a consumer, it's not like, hey, you want to look at this new product? This is a new feature that's been seamlessly implemented into your user experience. Great. And, Revolut will make some more money off of that. When you are an SME, when you're thinking about, okay, I need a credit card to start, I need a current account, then I'm going to need some, revolving credit lines, liquidity, working capital, those types of things. Those feel like different products, and those are assessed in a different light when you're looking at it from a business perspective.
And even to your initial point about getting cards for the kids, like, they're positioned as a feature, but obviously they're new products to a degree, and maybe that's the approach if you tie it back to our famous Rundle that we like to talk about. Like Revolut currently, what it offers is a subscription, and we get new features and functionality depending on how much I'm willing to pay for it, and I get shiny new cards. And maybe by making everything appear more like a feature than a product, it allows you to start charging more from a subscription point of view, because it doesn't feel like I'm paying. Why would I pay for a product that I don't want? Except, I'm different. It might feel differently paying for a new feature. So
Revolut is SaaS then. Feels a bit like it, right?
Possibly, yeah.
And someone was talking today about the business model, how VCs assess SaaS companies, how VCs assess fintechs. They're different things. But when you've got this subscription, you can get a Revolut account for free, obviously, and I'd say the vast majority do have it for free. Yep. But if you can add on and add on and add on more features and go premium and start getting people to pay for it, it's been a long trail they've been on to get there, but that could be going in a
I
certain.
would love to have seen the split out. Well, maybe it was there. Sorry, I didn't look at it in detail. But in terms of how many of those, the big question, the churn piece, how many of those are paying kind of subscription members or customers?
Yeah.
Because I know.
Monthly active users versus, hey, I just open up a Revolut account and I've never touched it.
Yeah, or I pay every so often for one payment or whatever. Yeah, I'd love to see that split out. That'd be interesting to see, because to me, they're probably best positioned to be that kind of fintech version of a Rundle, recurring revenue bundle. So,
yeah, absolutely.
Yeah, let's see.
All right. Well, Lex Sokolin, we'll set that challenge out for you, buddy. Why don't you see if you can get at those numbers for us?
Yeah.
We could speak about them and we can give you credit for it. So anyway, a few interesting other things I saw. This one has been sticking in my mind. Auto-tune. I don't know why. And it really struck me when I was reading Dan Runce's Trapital newsletter today. Trapital Business of Hip Hop.
Yeah.
Right?
It's excellent.
It is. And he was quoting A16Z's Chris Dixon's 2010 blog post that said the next big thing always starts out being dismissed as a toy. Okay. And if you think about some of the historical ones and I went to Chris Dixon's blog post in 2010, and he talked about Western Union dismissing the telephone as a toy in the late 1800s.
Yep.
They could have bought it, right? And had the whole market cornered, but they didn't. Email in the 1990s by the U.S. Postmaster General, who said, email will never replace traditional handwritten letters.
Yep.
People just like to get letters. Right? The iPhone by Nokia, who was kind of like, it's a toy. It's just a slight evolution from the iPod, right? And we see what happened there. Crypto by everyone.
Yep.
Right. And then NFTs now are kind of being dismissed as a toy. So I was going to go in that direction of thinking deeply about NFTs, but I won't, and how that is kind of being looked at as a toy right now. But there's so much that technology unlocks in terms of AR, VR, those types of things. I'm not going to get into that. What on the auto-tune side, this has been sticking to me because we're driving around. The kids are, love Lil Nas X, right? Listening to his songs. Post Malone, and I'm like, dude, it's all auto-tune. And my son's like, what's auto-tune? And I explained it to him.
Yeah.
And where you've got someone who can't really sing, but you sing into a box and then they can adjust the tune up and down so that you actually sound like you're singing in tune, but you're actually not. And what it's done is that it's created this whole new opportunity for artists that can't sing, like Kanye, to be able to put out different types of songs.
Yeah, absolutely.
Sell more, reach a wider audience. And this was originally dismissed as a toy. I thought it was a really interesting take. I'll stick it in the show notes, as you might expect. And it was just, it caught my attention because I've been a bit obsessed with auto-tune and the kids, not really knowing the difference.
On that very thing, I'll send you a video that you can put in the show notes as well. I was annoying Kira about this earlier. She wasn't listening to me. I came across, I mean, he's been around for years. I just never had heard of him. Bo Burnham, the comedian. And he does a lot of kind of comedy with music. He writes all of his own songs. He starred in movies. He's written and directed a movie. He was up for an Oscar last year. But he has a brilliant piece of his performance from about 5 years ago. The special is on Netflix called Make Happy. And at the end of it, he talks about being at a Kanye concert recently at the time, and how Kanye went on this big rant at the end with auto-tune and this instrumental in the background. And your man is like, I feel like I should give it a go. And then he goes on a 7-minute rant about Kanye was talking about his problems and power and money and stuff. And your man's rant is about, he has auto-tune on in the background, he has an instrumental, he has a big light show. It's an actually amazing performance. But he's ranting about Pringle cans and burritos and stuff like this. It's hilarious. But I'll send it on to you.
Send it
to
on.
your auto-tune
Send
point. We'll put it in the show notes. It's very funny.
Oh, I know. And I like one of my favorites, Mr. Brightside by the Killers. That was
actually, do you know what? I read something interesting earlier, because you're talking about kind of crossover there, and we're talking about Lil Nas X and a few others. But actually, I don't know if you've noticed, there's been a huge amount of publicity and public relations work done in the US in particular with the likes of Cash App and stuff in the last couple of weeks, where it's been crossing over into hip hop in particular. You had Megan Thee Stallion, I think that she did a big thing with Cash App and Square about giving away accounts or giving away money ultimately. But there's been a huge amount of that, and obviously we've talked about Square and Tidal and the Jay-Z link and stuff. You're seeing far more on the... And it's probably relevant to Revolut, because you haven't seen it actually, is the consumer-focused neobanks, challenger banks, and their crossover into kind of pop culture or kind of common culture is big in the US. And they sponsor sports athletes and stuff like that. I think Tom Brady had an announcement this week with, was it FTX? He's been announced as their ambassador, himself and Giselle.
Yeah.
It's surprising you haven't seen that really over here or in Europe even.
Fame is a currency in the United States of America.
Of course.
It's like I'm sitting on a accelerator demo day, and one of the top rated ones was because, I don't know, Will Smith was giving them a testimonial that he liked how this product tasted.
Yeah.
Or whatever. And because of that, it got ridiculously funded. Right.
It's crazy.
But there's more and more of that going on. And it's just because of the US. In Ireland, fame's not a currency. Europe, when the UK, it's, you got a bit closer to
and
the
stuff
US.
like that, yeah.
Ireland, no. Bono gets more fire spewed at him than actual adoring fans walking down the street in Ireland.
Yeah.
But I won't get into that.
No, but even into Europe, in the bigger markets, the actual markets where you'd want to be associated with somebody, don't see it as much. Especially on the challenger bank side, you would think that an association with someone from pop culture point of view would have been a good kind of tie-in. Strange.
You're right. That's one to think about.
Yeah, there's no sponsorships of like football teams because what's your man's name? Ryan Reynolds. He himself and that other comedian, they bought Wrexham Football.
Did they?
Yeah, and they announced their new sponsor today, which is TikTok.
Oh, wow.
So that's literally the first one where you've had like celebrity owners and kind of big high profile endorsers, stuff like that. Strange one, because Wrexham are in like the first or second division or something. They wouldn't be high profile, but again, you would think there would have been more of that.
Yeah, I see crypto sneaking into a few different places as well in sports. Not just FTX, there's other ones. So Crypto.com, I think, did a deal with one of the F1 racing companies.
Okay.
Which is interesting to do some sponsorship there.
Yep.
So
cool.
We'll see. All right. Anything else you wanted to highlight this evening?
No, I was trying to find a way to bring in that comedian and I managed it there, so I'm happy enough.
Good man. All right. I'll have to check him out.
Yeah. That's it from me.
All right, dude. Have a wonderful evening, and we'll talk again next week.
Take it easy.
Adios. That does it for this week, folks. You can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. So check us out online and subscribe to our Money Never Sleeps newsletter as well. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm the founding partner at Norio Ventures, and I'm an early-stage startup advisor and investor focused on fintech and digital assets. If you'd like to talk to me about your business, get in touch at pete@norioventures.com. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.